Hello. Let's begin with the key points from the financial results for the fiscal year ended March 31, 2025 to fiscal 2024. Net sales were 256.5 billion yen. Operating income was 39.7 billion yen. Ordinary income was 41.7 billion yen, and profit, including extraordinary profit and loss, was 32.1 billion yen. Both net sales and profit outperformed the previous fiscal year. The increase in profit was primarily attributable to extraordinary profit, mainly from gain on sale of investment securities. As a result, the company achieved record-high performance for the fourth consecutive fiscal year, with earnings for fiscal 2024 reaching an all-time high. On the return of value to shareholders, the company's annual dividend was 108 yen per share, and DOE was 3.6%. The company has achieved 16 consecutive years of dividend increases. Moving forward, the company remains committed to delivering stable shareholder returns by maintaining robust business performance and continuing its policy of consecutive dividend growth. The full-year forecast for fiscal 2025 is net sales of 257.0 billion yen, operating income of 37.0 billion yen, ordinary income of 37.0 billion yen, and profit of 26.0 billion yen. The economic outlook remains uncertain amid continued uncertainty surrounding U.S. tariff policies and heightening geopolitical tensions in various regions. However, excluding temporary increases in expenses, the company forecasts that business performance in fiscal 2025 will remain generally in line with fiscal 2024. On the return of value to shareholders, the company plans to pay an annual dividend of 152 yen per share for fiscal 2025. Furthermore, in tandem with the announcement of financial results for fiscal 2024, the company has also disclosed a release regarding a share buyback of 3 billion yen. The Medium-Term Management Plan, Shikumi 130, has entered its fourth year, which marks the start of the second stage. Let's briefly review the 3 years of the first stage. Let's start by looking at performance. Fiscal 2022 marked the beginning of the recovery from the COVID-19 pandemic. During the 3-year period since then, both net sales and operating income have increased steadily. Excluding the number of serious claims, the company was able to achieve nearly all of the 5-year targets set during the creation of the Medium-Term Management Plan. Achieving these targets in the first stage has put the company ahead of schedule. The company placed the greatest focus on the selection and concentration of business. The company completed withdrawal from the unprofitable business of residential insulation material field within the building materials segment. We also withdrew from the Sigma Floor and Noah Floor product lines and consolidated the calcium silicate board production lines. In terms of concentration in growth fields, the company actively invested in the advanced products segment for the semiconductor field, which is expected to see medium to long-term growth. Our goal was to establish production capacity of 60 billion yen. The company has nearly completed its investment in buildings and is steadily progressing with the installation of remaining equipment. The company started the second stage by restructuring and reorganizing its corporate philosophy framework. We renewed our promise, which defines the mindset and actions expected of human resources at NICHIAS, and established a new sustainability policy. I would now like to share the current progress of the company's key initiatives. First is the new core system that we are working to establish. We have finished defining requirements and are currently working on construction. Work is being performed while cooperating with over 100 internal and external stakeholders on a daily basis. Our target is to begin operation in October 2026. The second initiative is the Next Generation Showroom project, which the company is also preparing to launch. The concept of this showroom is to exhibit the company's technology and demonstrate how that technology can be used to solve customer challenges or develop new applications. The company plans to open the showroom in April 2026. After opening, investors will be given an opportunity to visit the showroom. The third initiative is the concept for a central research institute. The company is considering the consolidation of its factory buildings to form a central research institute. The aim of the institute is to improve the quality of research, the development of human resources, and the speed of operation. The company forecasts that the institute will be established during the next medium-term management plan. In the current second stage, our goal is to finalize the concept, begin work, and make visible progress. Moving on, I will explain our financial approach and its evolution. Until now, the company has strengthened its financial foundation by learning from the past and utilizing experience. As a result, the company now possesses sufficient capability and resilience. Going forward, while maintaining an approach appropriate for its business scale, the company will evolve toward proactive and strategic growth based on a future-oriented perspective. This shows the company's capital allocation for the 2-year period of the second stage. The graph on the left shows that the total source of funding is 83 billion yen, consisting of surplus cash on hand and operating cash flow. The use of funds in the graph on the right shows that we established a new strategic investment budget of 29 billion yen, in addition to previous capital investment. The company also allocated 30 billion yen for shareholder return. If any portion of the budget for strategic investment remains unused, it will be redirected to additional shareholder return. For shareholder return in the second stage, the company's basic policy is to provide a total return ratio of 50% or more. In regard to dividends, our basic policy is a progressive dividend with a DOE of 5.0% or higher. We will continue to ensure stable dividend payouts. The company will also implement share buybacks with consideration for balance with dividends. The cap for shares acquired through buybacks is set at approximately 10% of issued shares. The company will retire shares as appropriate to stay under this 10% cap. I would like to use equity ratio as an example for illustrating our medium to long-term financial outlook. As I discussed earlier, the second stage represents an evolution from our past approach, namely a transformation phase. In the next medium-term management plan, the company will take another step forward and enter a transition phase that is marked by even more active investment and returns. To continue, I will discuss our medium to long-term business orientation for sustainable growth. Until now, the company's 5 business segments have complemented each other to maintain resilience and adaptability amid market fluctuations. However, in response to the rapidly changing business environment, the company will categorize the 5 segments into core, strategic, and non-core businesses, thereby further clarifying its selection and concentration of business. The company will position the energy and industrial plant segment, the industrial products segment, and the advanced products segment related to semiconductors as its core businesses. These segments are expected to achieve stable growth and profitability. Meanwhile, segments with limited market growth potential, such as the building materials segment and the auto parts segment for internal combustion engines, will be categorized as non-core businesses and run with a greater emphasis on profitability. The company will designate 4 specific high-growth potential fields as strategic businesses and proactively allocate management resources to these areas in order to drive future growth.